I think the fundamental argument now for silver, it's certainly the best it's ever been that I've ever seen it. The industrial demand and the drop of real above ground silver supplies. I think when the next leg comes back up in gold, silver will run with it and maybe even get to the point where it can lead it. And that, of course, will be in the latter stage of whatever that bull market that's still to come that I believe in. But I think at least it has a worthy argument now to be in the same ballpark and maybe be in the same lineup with gold. When years ago, I've always placed it a distant second, and that always used to cause some people some agitation.
On Friday, the price of silver opened at $26.61 per ounce, indicating a 1.99% increase from the previous day and an 11.21% rise since the beginning of the year. Notably, Chinese silver industrial demand surged by an impressive 44% to 261.2 million ounces, primarily driven by growth in green applications, particularly in photovoltaic technology. China's dominance in PV production, responsible for over 90% of global panel shipments, underscores the significant role of silver in this sector. In contrast, industrial demand in the United States remained relatively stagnant at 128.1 million ounces, while Japan's demand stood at 98.0 million ounces, showing minimal change from the previous year. PeterGrandich highlights the improved fundamental argument for silver, citing rising industrial demand and declining above-ground supplies. He suggests that silver's investment potential may now be comparable to gold's, marking a departure from its previous perception as a distant second. However, despite initial gains following the release of the non-farm payrolls report, gold prices retraced, with the precious metal trading lower at around $2,280 after an initial rise to $2,310. Grandich anticipated this correction and consolidation phase following a significant increase in gold prices. He views this phase as healthy and necessary for the market, particularly in alleviating overbought conditions. The positive market sentiment on Friday may have contributed to the decline in gold prices, as gold typically performs better during periods of crisis due to its safe haven appeal. Grandich suggests that gold's correction and consolidation phase may result in a price range between $2,250 and $2,450. While the exact timing of the correction's end remains uncertain, he maintains optimism about gold's long-term prospects, with the prevailing trend still pointing upward. Come along as we explore PeterGrandich's valuable insights. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
The demand increase came evident a while back, but because when gold finally broke through the 2100 area and started to really, get very rallying, I think some people then started to look. From retail investors, they always tend to like quantity over quality. Not to say that gold outweighs tremendously, but a lot of retail people like to buy things. They'll buy $1,000, a thousand shares of $1 stock versus 1,000 shares of a $10 stock, simply because somehow they think they're getting more for the price. That's always been the same when it comes to silver as well. And so it's going to take more retail interest for silver in general to move. And I think that retail interest comes, A, when we finish this correction consolidation, B, when its biggest competition is breaking down, and as we speak, certainly Bitcoin is, and third, the overall market. But here's the one mistake I want to warn anybody that likes the metals not to root for. Don't root for a crash in the stock market. It's not in your best interest. Markets need to roll over and give people a chance to move money from one end to another. A crash will do us no good because no one's going to run out and say, with the stock market crashing, bonds going up in rates, buy me some junior resource stock. That's not going to benefit those of us that have interest in the smaller mining and exploration companies. And so a rollover in the stock market and cryptocurrency will be much better than a sharp sell-off. Well, I used to get in trouble at the shows because the silver bugs would get mad when I would say silver was like kissing your sister versus owning gold. But it's changed. And I think the fundamental argument now for silver, it's certainly the best it's ever been that I've ever seen it. The industrial demand and the drop of real above ground silver supplies. I think when the next leg comes back up in gold, silver will run with it and maybe even get to the point where it can lead it. And that, of course, will be in the latter stage of whatever that bull market that's still to come that I believe in. But I think at least it has a a worthy argument now to be in the same ballpark and maybe be in the same lineup with gold. When years ago, I've always placed it a distant second, and that always used to cause some people some agitation. A couple of weeks ago, when we first reached 2,400, I actually, because I've been long since 1,200, suggested that we're going to see a correction and consolidation and take anywhere from 5 to 25% off. And I knew right away the market was overextended because the big bulls wrote me emails and told me, "You're crazy. I'm never selling a dime of my gold." And it really needed it. I've said this now for the last 2 weeks. The longer we consolidate and correct, the better opportunity for those that had these much higher targets in the 3, 4, 5,000 and beyond to happen. It was very overbought. It's healthy. It's needed. And not quite certain we're ever going to know the exact time when it comes to an end. But I do think between 2250 and 2450, we'll see a consolidation correction. And like I said, is the least resistance for gold still is up. I'm not looking for anything much below 2250. And if it happened, then we might have to start rethinking our long-term projections. But right now, I think it's still much higher over a longer period of time.
In the 2 decades since Gallup initiated its survey, inflation concerns have surged to unprecedented levels. The post-pandemic economic landscape has intensified families' apprehensions regarding the cost of living. Before 2022, the highest percentage of individuals mentioning inflation was recorded at 18% in 2008, during the peak of the financial crisis. Notably, PeterGrandich highlights the resurgence of stagflation, a concerning economic phenomenon characterized by a simultaneous slowdown in economic growth and a rise in inflation. This development is viewed unfavorably, especially given the prevailing economic conditions and political environment. Despite promising inflation reports indicating a decline in the metric, inflation began to resurface earlier this year, escalating to 3.5% in March. Grandich underscores various factors contributing to the downturn by expressing pessimism about the economy. These include the ongoing debt spiral, challenges within the retirement system, complexities in immigration dynamics, and political gridlock. Rather than bolstering the economy, these issues are perceived as weakening its foundation. Let's get back to the interview.
Well, the only good news of that forecast was I was one that talked about very few, if not any, interest rate cuts. We still haven't seen a recession as we know it. Some will argue that there's been massaging of our employment numbers and all, but there's one thing that is, I think, clear now. We're in a slowdown, and we're still seeing inflation not moderating, but actually revamping and rising again. It's brought a word that really was not used except through the early 80s and then was put on the shelf, and it's come back now. And that's stagflation. And that is evident. And that's probably the worst of all worlds, to see a slowing economy and yet inflation not declining. It's certainly not beneficial for those who have argued that Biden economics was going to be the answer to our woes here in the United States. We're seeing many people recognizing it, and it's become the number one issue for our upcoming election. And I think it will remain that way because I think the economy overall is going to weaken, not get stronger. I've had 5 reasons to take the most bearish stance ever in my 40 plus year career. The first is the debt spiral that continues. The second is the retirement and aging crisis. 65% of Americans are working paycheck to paycheck. They're not in any position, and they're getting more hurt based on this economy. The third factor was the immigration, what I called an immigration economic invasion. I'm not here to decide who's the right people, who are the wrong people. Is it justified for them to be here or not? But I will tell you this, most of the people coming are coming with basically their shirts on their back. And that's going to be an economic weight to the United States. The fourth is the BRICS that we decided. But Jeremy, the fifth is the worst of the problems because you would expect it to fix any of the other problems we have. And that's the political paralysis we now have in the United States. Not only do the Democrats and Republicans are unable to work on anything worthwhile, but each party is now having a splintering of members moving far left in the Democrats and further far right in the Republicans. And so when these issues become paramount and are going to demand action, we don't have the groups necessary politically in order to take those actions. And I think that's the biggest problem, way past no matter who wins the general election. political paralysis is going to be one of the biggest issues in the United States for years to come. Half of America is really going to dislike whoever wins. That's how divided we are in the United States. There is no middle ground anymore.
Yeah.
And the problem is, no matter who wins, there's going to be another half of the society that doesn't really want to see them be successful at all. And that's just not the American way. And I must point out, Canada is facing the same issue as well. And these were the world's two biggest trading partners, and it will impact both of us. I have this joke, Jeremy, and I hope it doesn't even cause worse enemies. But I feel if the United States and Canada each traded their leader, the other side would say they got the short end of the stick. So I think there's a lot of issues both here and north of our border politically that aren't going to go away and are going to impact negatively overall.
In the face of escalating concerns over inflation and the looming specter of stagflation, how can individuals safeguard their financial well-being and navigate the complexities of today's economic challenges? Share your perspective in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.